You are listening to the REI Mastermind Podcast. Join JD as he chats with industry-leading real estate experts and professionals. We learn from their experience and uncover the strategies to their success that we can implement into our own businesses, and we can drive immediate results today. They share their experience and wisdom as we build a foundation to our own success. This is the REI Mastermind Network.
Well, we have Anthony Faso and Cameron Christiansen, and I'm going to start things off and pointing you to their website because they've been kind enough to give you access to some free resources here. So Infinite Wealth Consultants /REI Mastermind. And you're going to see something there that's typically worth $600, and you're going to get kind of a sneak peek as to what they're talking about. But we're going to cover this phrase called infinite banking here today. And infinite banking is something that is kind of a mystery to a lot of people, and we want to dive a little deeper today. So really appreciate your guys' time.
Yeah, happy to be here. Thanks for having us.
You know, we just wanted to clarify with that link, it's infinitewealthconsultants.com.
Sure.
Then the /.
Yeah, and it's going to be a long one, so make sure you head over to the show notes, and I'll make sure to put, because with your domain name and my domain name, it's going to be a keyboard warrior on that one.
It's a small paragraph.
Yeah. So, I hate to jump into this, but and go as elementary as we are, but we better define what the term infinite banking actually is first.
Great. So I go ahead and take that one. Infinite banking, that's a concept. It's just more, it's in the simplest terms, it's a cash management tool or a strategy. And what it is, because really let's focus on real estate investors, right? Mm-hmm. What they typically have is they want to buy a house, whether they're paying cash or hopefully they're getting a mortgage and just paying the down payment, but they have to accumulate that down payment. So typically maybe it takes, some people faster or longer, but they put money in some sort of account, save up enough money till they buy the house. Then they buy the house and drain the account. But they want to buy more cash flowing assets. So they repeat the process, save up money till they have enough, buy another asset and drain the account. The problem is we're breaking the compound interest curve, right? Because we keep on draining that account back down to zero. So what we can do, I think most of your listeners would not want their money to ever stop compounding, or I would hope they would. But the system they're using is breaking that compound interest curve every time. And with the infinite banking concept, we can just add one simple step and obtain that uninterrupted compound interest. And I know there's a lot of people, particularly lately, talking about infinite banking, but I will say this is all we do is infinite banking. We're not 401ks, mutual funds. We're not, we don't have a fund to buy apartment complexes. Like, we want to be a specialist in our sandbox. And I believe we're one of the best in the country, but there's a lot of people out there and a lot of misconceptions out there. Mm-hmm. But in the simplest terms, it's just like using a rewards credit card. Now, Jack, do you use a rewards credit card?
Oh, yeah, of course. Okay.
Now, why do you add that one extra step as opposed to just paying cash?
Oh, there's a perceived value there,
Exactly. You're probably thinking, look, I'm going to buy this anyways. I had this one extra step, my credit card. I'm going to get some extra bonuses, miles, cash back, or so forth. If you can understand that, you can understand infinite banking. Because what we say, infinite banking is like using a rewards credit card to buy real estate. Mm-hmm. And really what we're doing is we're trying to replace the account. In the example we were using, we're saving up money and then draining the account. What we're typically looking for, we need that account to be liquid, meaning we have easy access to it with no penalties and no limitations. And also it's safe. right? That is going to be there when we need it. We're not really looking for large swings of growth because we also don't want to take any losses. So really what we're doing with infinite banking, at least the way that we do it, we're just saying that there's a better account to store your money as opposed to a bank that's safe and liquid. What we use are specially designed whole life policies. Now, I don't know if you're like me. When I first heard this and I heard whole life, I was like, whoa, wait a minute. Like I hear that's terrible. I mean, and there's all sorts of misconceptions about whole life. Well, to be honest, some of them are actually valid. But what I like to say is that this ain't your mama's whole life insurance policy, right? Where you don't have cash value for 3 or 4 years. The way we design it, you have cash value immediately, and we have clients funding their policy, turning around and taking the cash value out in 30 days. So all we're saying, instead of using that account to fund your investments, we just move that account to infinite banking policy. And then we use that account to do it. So that's the rewards credit card step. That's that extra step. If you buy that, we want you to buy real estate. This isn't an either or. We're not saying put your money in life insurance or real estate or your business or the stock market, whatever that is. This is an and, that you can put the money in the policy and real estate and your business. And by doing this, you're going to get some extra bonuses. Instead of getting miles or cash back, you're going to get uninterrupted compound interest, which gives you more cash to do more deals. And then we just kind of continue making that passive income outside. And this whole time we have our money that is liquid and safe, just like a bank, but it's also earning at a much higher rate of return. That rate of return is tax-free, and there's going to be some level of asset protection on that account. Sure. So that's probably that in a nutshell. I've brought this up in previous episodes, but when it comes to life insurance and some of these other industries that you're referring to, and I'm going to put infinite banking, the people that do this type of service, I find that more times than not, this is an accidental profession. Like, how did you guys get into this?
Well,
man, you hit that right on the head. You're exact. Well,
let me jump in there. I absolutely agree with that. Anthony and I have our own personal stories of kind of how we ended up here and being partners and stuff. But that was one of the things that really struck me when I first came across infinite banking, is as we started going to masterminds and talking to some of the top advisors in the country, is I don't know of any of them that really set out to be kind of an infinite banking practitioner. What you're going to find is when you start talking to them is really we were all business owners or investors and came across this strategy and almost felt an obligation to share it with people after we realized how this thing actually works. And so very perceptive. And it's everybody that's kind of the top advisor across the country. I don't think anybody really set out to be here.
No,
I wanted to spend a little time too talking about the importance of if this is something that people want to pursue, how important it is to find somebody that specializes in it. Because frankly, I've run into a lot of wholesale insurance agents that it's more of a add-on or something that they might have a glancing concept of versus actually knowing how this works.
In fact, we actually did a video on there that is the top 5 questions to ask a infinite banking agent. And we can send you a link to that video, but infinite banking is very different than life insurance. Mm-hmm. And I think that's why there's not a life insurance agents turn into infinite banking, right? Or it's typically, just as Cameron had said, these business owners or people that are thinking differently, because we do use life insurance, but we use it in such a different way than what life insurance agents are taught. Why we think it's important that you work with somebody who lives and breathes infinite banking. Mm-hmm. And because the design is very different than a typical whole life policy. And typically we got to get creative, because typically, like your mama's whole life, they say, hey, you need $1 million of death benefit. Well, that's going to cost you X. I mean, the way we do it, we're designing it very differently. The client will say, look, I have this amount of money on the side or this amount per year. And then our question isn't how much we want to get as much cash value as possible. We're actually trying to lower the death benefit. So that design is very key, but maybe even more important than the design is how you use it. Now, most people probably have never talked to their life insurance agent, and basically when they get it or when somebody dies or they move. Right in between there, there really is no service. Infinite banking is the exact opposite, because there's going to be questions. Okay, I have this policy now. How do I use it? How do I leverage that? And what do I use it for? And so there's a lot more questions. So that's why it's important that you have somebody who's going to be able to answer those questions. And the best way to learn on how to answer those is to do them yourself. So really, whoever you use, because a lot of people will say, look, my uncle or my brother-in-law sells life insurance. I'm going to go to him. You totally could. But the problem is, even if he does design it properly, or she, it's more importantly of how you use it. Making sure that you're using it when you should, and also when you shouldn't, and ways to maximize that. So you need to be with somebody who's doing this personally, and that they're being the best position to teach others.
Sure. I've heard the phrase a number of times, and I think you might have mentioned it earlier, talking about being your own banker. When it comes to this type of thing, like, can you explain a little bit about how that works?
Yeah, absolutely. Is the original idea of becoming your own banker came from Nelson Nash. He wrote a book that was published in 2000. It's called Becoming Your Own Banker. And that's the book that I first read when I got interested in this concept. And that's the one that I send most people to. It's a great resource. If somebody's going to start researching this, it's a great place to go. And in that book, what Nelson talks about is he talks about how much interest just the average person is sending financial institutions in the form of interest every single year. And he goes through and he takes the average individual and he breaks down their cash flow. And he says that the average person is sending 35% of their income to banks and financial institutions in the form of interest. And the strategy that he lays out in that book is taking over some of those loan payments, such as car loans, mortgages, vacations, credit cards, things like that. And so that idea of becoming your own banker is really where that idea stems from. And that's probably the fundamental idea. But what I would say, if we were to back out and look at the 30,000 foot level of infinite banking practitioners across the country, is I think that advisors typically fall in one of two camps. One, which is what Nelson kind of laid out there in his book, where we're going to go after and recapture our expenses over your lifetime. And then the other camp is where Anthony and I fall into, is if you look at the math and you look at some of the practicality of it, we believe that it works much, much better if you're actually using the cash value as collateral to go buy cash flowing and appreciating assets, as opposed to recapturing kind of cars and depreciating assets. Sure.
No, that makes a lot of sense. Just to remind everybody, head over to the website again, infinitewealthconsultants.com. And I'll make sure to have a link in the show notes, because there's going to be some free training available to you that's worth quite a bit of money, $600 worth of training there. So take advantage of that. I also want to take a second and direct people, if you haven't done so already, definitely look up their podcast, Infinite Wealth Podcast. And if you're watching the video, they have the sign in the background. But that's definitely something that I'm sure you guys go on a much deeper dive. And you say it's one additional step, but I mean, you based a whole podcast on the concept.
It was our podcast is really, I'd say it's broken up kind of 50-50 on content. 50% of the time is Anthony and I are talking about the infinite banking concept and kind of diving deep into some of the strategies and practical applications of it. And then the other time is we feel like there's a bigger emphasis on what do we actually do with the money once we have it. And so the other half of our podcast is us identifying, cash flowing opportunities for our listeners, right? Stuff that we don't think people would typically hear about. We talk about the burst strategy. We talk about single family rentals right in the Midwest. We talk about a whole bunch of stuff. And so if somebody's looking really kind of to create that cash flow instead of waiting until somebody's 60 years old, absolutely tune in to the podcast. We got a bunch of really good content for you.
Yeah, no, that's awesome. So, one of the things that I would probably assume as people's thinking now is, how does this compare with a self-directed IRA? Because that's a lot of investors will look into that as an option as well.
Okay.
And are there similar restrictions?
Good question.
You tee that up for me, okay? 'Cause I don't know how you know about my background, but I'm a self-proclaimed recovering CPA. And so I had my own tax firm, and real quickly I'll share my story. In 2008, myself, along with my clients, got punched in the gut. Right, our 401k became a 201k. Equity in our house was gone, and that's when I went looking for alternatives to typical financial planning, and that's when I found the infinite banking concept. So I'm very familiar with self-directed IRAs, and the main reason people use it, in my understanding, is not because that's the best account to do it. It's because that's where the money is.
Mm-hmm.
Okay, so but the downside of a self-directed IRA, particularly investing in, I would say self-directed IRA would be great if you're investing in things that are taxed at the ordinary rate. If you're buying notes, doing hard money lending, any sort of those short term that are not subject to capital gains, there's a place for them in the self-directed IRA. Okay. Real estate, the advantages of real estate, I mean, there's many advantages of real estate, but a couple are the tax benefits and the ability to leverage. All right. Now, those get diluted when you have them inside an IRA. For example, and you probably know this, but for our listeners and for Cameron, let me explain that a self-directed IRA, you can't co-sign on a loan for a mortgage on a self-directed IRA. So either you need to pay cash, or you can leverage, but you're going to have to put a higher down payment, and the interest rate is typically much higher. We've actually done the math and are in the process of creating some content with it, where we're going to say, what if you put the money in your self-directed IRA, and this will sound strange to somebody, but let's wait till we see the math. What if we take the money out of our self-directed IRA, pay the tax, pay the penalty, but now we have a smaller sum, but we're able to leverage more. Okay. Also, with the tax advantages of real estate, with using the depreciation and mortgage interest to offset your cash flow. Also, when you do go to sell it, it's going to be a long-term capital gains, and maybe there's the ability to do a 1031. When you have it inside a self-directed IRA, we lose all of those tax advantages. we have done the math, so I kind of tell you the answer, but we're going to make it look prettier. But by taking that money out, paying the taxes, we're gonna create more cash flow and have a higher net worth outside the IRA because of the ability to leverage and because of the tax advantages. So really, we're not a fan of real estate, particularly rental or anything that's taxed as a long-term capital gain inside account that forces ordinary income. Mm-hmm. So the real question, so when we compare that to infinite banking, the first thing we'd have to do is get the money out. But we are big on doing the math. There's a lot of times we've had a concept or a strategy, and maybe it sounded good or maybe it didn't, but when we did the math, that allowed us to confirm maybe something isn't too good to be true, or maybe this isn't as bad as we thought. So let's take this a step further, because we also did the math. Hey, why don't I just buy an asset? People might say, look, I don't need the death benefit. I hear whole life's terrible. I just want to buy real estate. I don't want to have to go through all that stuff. Totally get it. Well, we've done the math, and we do it for our clients as part of our process. Let's say you buy a property with cash. We're going to run the numbers. How much money are you going to have at the end of the day? Okay. Now let's run it through a policy, buying the same money coming in, same money going out, but a different money at the end of the day. And because we never broke the compound interest curve, we can show you mathematically by buying whatever asset you want, running it through the policy, you're going to have more cash at the end of the day.
Sure. No, and one of the things that I think you could probably speak to pretty quickly is the concept of, the IRA usually has some sort of restrictions regarding how you can actually use it. A good example is that, you can't really hold a property yourself in an IRA, right?
Yeah, they once you look at it, they have a list of prohibited transactions. And as you start to look at it pretty quickly, you realize there's nothing for personal benefit that's on there. Mm-hmm. So anytime most of our clients are looking to purchase real estate, it's typically always for their benefit in terms of cash flow. And so a lot of times, the account doesn't line up with what their stated goals are.
And one thing people don't fully understand is that you cannot, commingle funds. So if you buy that rental property with your self-directed IRA, and maybe if we use up all the cash inside the IRA to the house, and then the AC breaks, if you pay that out of pocket, that's a huge violation of. Then we start commingling funds, and there could be a large penalty on that self-directed IRA. So there are some asset classes that are ideal in the self-directed IRA, and real estate is not one of them.
Sure. Well, we're going to give you I'm going to tee up a question for you, and then we're going to touch on it here in a second. But I'd like you to provide, you mentioned the 5 questions to ask in infinite bankers, and how they can help you, or those so you can make that proper educated decision. But before we do, I once again want to point everybody to your website, infinitewealthconsultants.com. And there is a special URL in the show notes to take you to an offer that they're making for you here today. Make sure to check out Infinite Wealth Podcast. But again, let's circle back on that. If people are interested in this, what type of questions should they ask when selecting a specialist for this?
Okay.
Yeah. is the first one that I would recommend. I mean, you could pick any one of them, but the first one that usually thins the herd pretty quickly is ask the advisor for examples of how they've used it most recently, right? And ask them for examples. And most of them just kind of start to stumble right there. They've never actually used it or implemented the strategy in any way. Yeah.
So the first, so another one is, what's their process to help support you using the policy? Because there's going to be some money flowing in and flowing out. I mean, they're going to need some hand holding at least at the beginning to properly service the client using the infinite banking concept. Also, I'd want to ask them what companies they're using. Mm-hmm. We only use mutual companies, which I won't get too much in the detail, but there's really a stock company and a mutual company. Stock company is owned by stockholders. Mutual company is owned mutually by the policyholders. For us, that's a very big deal, because any business is there to create value for the owners. So the stock is there wanting to prop up the stock price, but a mutual company isn't traded on the stock exchange. They want to make sure that the money is going to be there when their owners need it most. Also, let me see. Here's a question that I wish more people would ask is, let me talk to a couple of your clients. Mm-hmm. Because you talk to anybody who's trying to sell you something, they're going to take good care of you, right? But to really know how good the service is, and particularly with infinite banking, that service is very important. I would ask people, can you give me a couple of your clients that are willing to talk to me? Then you're going to get the real deal. How is the service? Or, would you do it again? So I think that's very important. And I'm trying to make a list. I don't know if I remembered them all, but there's another one, because a lot of, like as Cameron mentioned, Nelson Nash wrote the book Becoming Your Own Banker, and he's the one who coined this concept, infinite banking concept. But he's the first one to say he didn't create it. He's just, because people have been doing this for hundreds of years, he was just the first person to actually put it in a book and explain why, and to teach people how to use it. But what had happened once he did that, a lot of insurance guys were using that concept to sell more life insurance without properly designing it or properly using the right companies. So what Nelson did, before he passed, he created a certification where an agent has to pass a test. There's a code of ethics. And even now, they can't just join. They have to be mentored by somebody. Somebody has to be a sponsor for them to join. And so if you're serious about this, I would only work with somebody who's certified. Because it doesn't cost the client any more money if they use us or their Uncle Vinny or their financial planner. I mean, we get paid from the insurance company. There are some advisors who do charge extra, but we do not. Right. So if there's no cost to the client, why would you not use somebody who's taken the time to be certified and following those code of ethics?
Mm-hmm. So, so for my final question, that, I lean into the concept that I don't know what I don't know. What question do you wish I would have asked you here today?
What question do I wish I would? I've got to hang up with our industry. That just comes to the top of mind. It's always around the wording, right? Anthony and I have talked about this quite a bit. Is that in our industry, people mix words a lot. They use them interchangeably, and they mean drastically different things. Mm-hmm. And so the three words that I'm thinking of are saving, investing, and speculating. And for me, that's a big deal. Savings for us is kind of a verb. It's an action. It's moving from one account to the next. And then investing is where there's a level of due diligence, right? Where if someone's got a process for success, right? If you do A and B, then there's a very high likelihood that C is going to happen. And when you look at really successful investors, right, their process is pretty boring, right? They have a certain set of metrics that take stuff through. And then speculating is the one that is used quite often. Really, speculating for us is, something, it's an asset that has no cash flow, no control, and no collateral. And at the end of the day, the underlying investment strategy is really just hope. And so those three get used interchangeably. And so I would like to probably have that one be brought up a little bit more often.
Well, first of all, that's a very good question. I like it. And I'm glad I got to go second, so I got some time to think about it. But what I wish you would have asked us is, what the heck is on Cameron's shirt? Okay. And if you're on the podcast, his shirt says PI and then the greater sign ME. And this is a goal of our company. And we follow a lot of the teaching of Robert Kiyosaki.
Sure.
And we're trying to teach our clients to be financially independent, not just dollars, but more importantly, cents as in knowledge. So one of the sayings we have is that our goal is not to build a crazy net worth and not touch it till we're in our 60s. We want to follow financial freedom, just like what Robert Kiyosaki taught. And he says financial freedom is when your passive income, abbreviated PI, is greater than the monthly expenses, or ME. Or like we like to say, my goal is that my pie is going to be bigger than me.
Mm-hmm.
So.
No, that's so can they get your shirt somewhere too?
If they're a client.
We actually order these shirts through a company that's out of Cambodia. What they do is they actually rescue women out of the sex trafficking, and they provide opportunities for them to work. And so they are on back order, so we have more shirts coming in. But if somebody would like a shirt, they can certainly reach out to us at info@infinitewealthconsultants.com.
Sure.
Well, we also give them to podcast hosts that invite us on their podcast. So we'll send in you one.
Oh, that'd be awesome. So I'm going to direct everybody. You spurred one more question. And if you don't hear the answer in the podcast, I'm going to send you over to the Patreon to get this hidden question there. And I'm not going to hide it behind any paywall or anything, but I'm going to make you do a little hoops to get to it. But here's my last question. How long does it take somebody to put savings or have this account developed before they can do something with it? Like how much capital or how much money do they have to put in?
There's no cap or minimum, right? Is what we say is what I like to tell clients is that we've got clients that put in maybe $25-$50 a month, all the way up to probably close to $1 million a year. So there's no cap. As how quickly we can access the money, it's almost immediately. Is we have clients that make that first premium, and then within the first 30 days, they're turning around and they're accessing the cash value and they're putting it to work. And that's what we would prefer to see, right? Is we want dollars moving instead of sitting. Mm-hmm. We've got many, many examples of clients coming with kind of lump sums, especially real estate investors, and we can kind of dump that money into a policy, and we can have access to, greater than 90% of that.
One thing I will add, if what I found of not really a minimum, but really to make this worthwhile, right? Because we need to have, you can maybe do it for $100 a month, but the more you put in, the more you can use, right? So mm-hmm. What I like, what kind of I found of a rule of thumb for this the minimum for this still to make sense to have some cash would be 10 10 times your age per month. So if you're 40, that would be $400 a month, or, and so forth. So, but we do often work with people that are putting in less, but that's kind of what I found is like a sweet spot to start.
Sure. Well, guys, this has been a great conversation. I appreciate you instilling this down to digestible pieces for us. And I will make sure to include all of those links in the show notes. But as far as I'm concerned, you have an open invite if you ever want to come back.
Thank you very much. Appreciate that. And we'd love to extend an invite onto our show as well. We'd love to have you.
Yeah, that'd be fun. So thank you again.
Thanks. Go make it a fantastic day.
This has been the REI Mastermind Network. You can already tell that we've made some changes and a few more are on the way. If you are interested in what we have planned, head over to patreon.com/REI Mastermind and support the show today. Financial contributions are always appreciated, along with a like, share, and review. It really helps us grow and reach more people with this valuable information. See you next time, and tell a friend.